Okay, hi everybody, it's Russell Markham here from VectorVest. It's great to get going now on the webcast. Can't wait to share all this great information with you today. Now I'm just going to put it out there right at the start. My aim today is to get you to depart with 10 US dollars. So call it, let's say 13 or 14 Australian dollars, because by doing so at the end of the webcast, I'm going to get you to be able to use the VectorVest system, give it a go for 30 days, so you can too see all the great techniques and practice all the great techniques that we're going to share with you in the webcast today. All right, so that's my aim. I'm going to put it out there right up front. This webcast is all about you, giving you the tools so you can invest in the market and not have to spend more than 10 minutes a day. So we want to make you like this person here in the hammock, laid back, relaxed, not having to stress about things every day. All right, in fact, I'm going to give you a promise. So the first slide here I want to show you here is my big promise to you is this. By implementing the things that I'm going to show you today, you're going to be able to invest with confidence and really outperform the market in less than 10 minutes a day. You don't have to be in and out, let's say like in 10 minutes a day, jumping in at 10 o'clock and then getting out at 10 past 10 and then having to look to get in and out of the market again. It's kind of the opposite of that, where you can be relaxed, all right, have a life, come home from work, do the things that you need to do, and not have to spend more than 10 minutes a day managing your money. So you're in the right place if, and we're going to bring up a couple of slides on that very shortly, but let's just go back to the slide prior to this, and let's just give you a little bit of a background behind myself as well. My name's Russell Markham, and I'm the Director of Educational Services for Asia Pacific. And I've been at VectorVest now for just on 8 years, and I've been investing and trading since my early 20s. In fact, I actually approached VectorVest and asked VectorVest if I could work for VectorVest because I loved their product, their program so much. All right. Now, just a little bit more background behind me. I'm not a guru investor. I'm lucky enough to use the VectorVest system that helps me make smart decisions and has made me some good returns over the years. And believe you me, I've made all the mistakes there are to make. I've bought shares only to see them drop in price. I've sold out shares only to see them double or triple in price. I've put stop losses incorrectly and been stopped out of trades where I could have made a lot more money. I've bought into things not fully understanding the fundamentals or technicals of those given stocks and lost a fair bit of money. I've also made some very good money on stocks. So I've made a lot of mistakes. I've had some successes. Since I've moved over to VectorVest, it has changed my life. My investing, I'm finally consistently now making money in the market. And I want to show you too how you can do this as well. Okay, so here we are. You're in the right place if, firstly here, you're tired of buying stocks only to see them drop right after you've bought them, all right? So I'm sure it's happened to all of us. Sometimes it feels like someone is watching over your shoulder, waiting for you to hit that buy button, right? And as soon as you've bought the shares, boom, they drop, right? Or perhaps, what about this point here, all right? You're frustrated because you don't know when to sell. You might never have had a profitable trade, or maybe you have had profitable trades, and then you've watched them turn around and become losers. How many of us have bought into shares, nice and profitable, and then you see that profit erode and then you end up with a loss? Or what about this point here? You feel like you don't have the time to manage your stocks. Often hear this reason, right? I don't have the time, right? You might have a job during the day or family commitments and time is short to you. Or maybe you just don't have any confidence in yourself that you can actually make money in the market due to all the things that have happened to you. You just lost confidence in yourself and in investing. Right? All in all, you just want a simple way to buy the right stocks at the right time. Right, so in today's webcast here, this is what we're going to look to learn. All right, so today you'll learn several important things. Right, the first one here is the biggest thing that we're going to cover in section 1 is to move away from where you're getting inconsistent gains to where you're just totally inconsistent. We want to move you away from being inconsistent, and that is we want to move you away to being consistent. Right, so we're going to identify the mistakes that are making us inconsistent. We're going to talk about what they look like and what not to do. And just by knowing that, it will help you out. But then I'm also going to show you 5 steps that you need to get consistent gains. Then I'm going to move over and look at how some of the top investors pick their stocks. So how do you become like one of the top investors out there? And this is where I'll give you a 3-part stock buying checklist. It's the same checklist I go through when looking for stocks that I want to invest in myself. So in that section, I'm going to show you what to look for. We're going to look for examples, and then you and I are going to do it together. We're actually going to get into a tool that I use each and every day to look for some great stocks. Okay, so the idea is that after the webinar today, you'll have a list of stocks that you would consider buying yourself. So I think that's a pretty good part about today's webinar, that you can have a list of stocks that you may consider yourself. And then what I'm going to do is I'm going to wrap things up, and I'm going to show you a 10-minute routine, right? So you could do each and every day, and this is why we do this in the webinar. It's called the 10-minute investor. It's a 10-minute routine that you can do each night to manage your portfolio. It's the same routine that our clients use. In fact, it originated from one of our clients who just was totally stressed and overwhelmed with things going on in his life, and he implemented this 10-minute routine that really turned things around for him. Okay, so these are the 3 big pieces that we're going to cover today. So I really want you to stick to the end, because what we're going to do right there at the end is I'm going to make sure that I give you a plan, right? So you can effectively take some of the key aspects about today. I'm going to put it into a PowerPoint plan that you can take away and consider. All right, you can print it out. So don't let me forget, right at the end, stick to the end. I'm trying to encourage you to stick to the end, because I want you to see exactly what we're going to be covering today. So let me ask you this. Here's some questions here. I'll put a few questions in. Here's the first question. First question here is, what's the hardest part about making money in the market? All right, so just some pointers there. Is it knowing when to sell a stock? Is it knowing what to buy? Is it difficulties in finding certain stocks? What I want to note here is most investors fail. All right, most people fail at investing. Yes, the average investor struggles. Research shows that the average investor over a recent 20-year period is well underperforming the ASX 200. So when you're inconsistent, it causes frustration. Right? You end up cursing the market, thinking that the market gods are against you, right? And worse yet, you label yourself as a failure. But if you're able to do this right, you'll no longer have the stress about your trades, because this is what it's all about, right? So we don't want you to be a failure. We don't want you to stress about your trades. You're going to be able to place trades, and you're going to be in control of placing those trades. So even if trades go against you, you'll know that you've got everything under control. To kick things off, let's look at how to move from being inconsistent to being consistent. So the first thing that we need to do is we need to fix the mistakes that we're making that are causing us to be inconsistent. So the way I see it is there are 4 big mistakes taking place. So let's look at the first one here. The first mistake here is that you think of the money first. Now you may think, I want to make money. Of course, we all do, right? That's the whole point of investing. A lot of us think that it's the main goal. But think about this, right? Think about your job or the jobs that you have or had. Do you think about the money first and foremost every single day when doing your job? The answer to that is probably no, right? Why? Well, because if you think of the money first, you're not going to do your job well, right? So as an investor, you want to be thinking about making the best trades and doing the trades well. The money will be secondary, because when you think about the money first, you make mistakes, all right? And one of those mistakes there is you become emotional. So if you're just concentrating on the money, emotion can get the better of you, especially when the market is up or down. There's a lot of emotional trades going on each and every day. And what does that lead to? It leads to making bad decisions, right? So think about this person who has road rage. What do you think that the decisions of this person are? Do you think that they are rational? He's probably being fairly irrational, letting the situation get the better of him, right? So here's a quick little quiz here. I'm going to give you 5 statements. Just see if you've made any of these statements in your trading ever or in recent times. All right, so here they are. I know it's down, but it'll come back. Have any of you ever thought that? I'm guilty of that one. All right, what about this one here? It's already down 20%. I might as well hold on to it now. It's a pretty common one, right? I have a profit, but if I close it now, it'll probably keep going up. What about this one here? I know I lost more than I thought, but if I close now, it'll probably go up tomorrow. What about this one here? Quite a classic one, right? The last time I sold a stock, it kept going up, so I'm not selling this one yet. So the statements are all emotional statements, and it's most likely to lead to bad decisions, right? These are all examples of, and here are the emotions coming in: frustration, fear, greed, despair, and hope. So if you're thinking of any of these before, during, or after your trades, you're not going to be successful. What you need is, we need to build a system. You need to have a system which eliminates these emotions. So mistake number one was that you're only thinking of the money first, right? So that's more psychological, and the rest are mechanical. So mistake number one, again, that you're thinking of the money first. So the second mistake here is that you buy stocks that are going down. Now, unfortunately, this seems to be something that has been ingrained in investors' heads since birth. You've been told, buy those stocks that are going down because they're good, they're cheap, they'll go back up. Correct me if I'm wrong here, but when a lot of you got into investing, you felt like, I don't know enough about this, right? I kind of know a little bit, but let me go and talk to a financial advisor or an expert on TV or one of those other experts out there to get some tips, right? A lot of people feel that they don't have the skills or knowledge to invest on their own. So what do? They turn to the gurus to get their stock picks. And those gurus tell people to buy stocks that are falling because they're cheaper, you can buy more shares, and you can dollar cost average. Right? So let me show you what ends up happening a lot of the time. Here's a real life example from one of our many clients. This particular customer of ours held Telstra and didn't know what to do. So first off in the graph, look at the stock over here, right? You can see it was falling in price. And guess what the brokers told the customers to do? Buy, buy over here. Let me put on my pen here. So if I go to my pointer options here, and let's put on the pen, all right? Buy here. You'll never get it cheaper. Buy here. Wow, it's so cheap now. Buy here. Buy here. Wow, once in a lifetime opportunity. Buy it now. You'll never get it cheaper. It's all the way down from $6.50 plus. You can pick it up now for below $5. So in one of the many webcasts that I conduct every year, we had a customer on there asking us whether Telstra was a good buy around about that $5 mark. It's a classic example of being taught to buy stocks that are moving down. The reason why the customer asked, luckily she knew exactly what the answer was because she was using VectorVest, but she had been noted by her broker that it was good to buy into Telstra to dollar cost average down. Fortunately, when we ran through the analysis, the customer knew exactly that now was certainly not the time to pick up Telstra. I'm going to get a little bit more into that later on. Now at the webcast that we ran, fortunately, everybody saw it, right? We did the analysis. We certainly established that Telstra was not a buy just below $5. And as you can see, the couple of weeks that went thereafter, Telstra fell well over 25%. So keep this in mind. What you see in the past is most likely what will happen in the future. Being taught to buy stocks that look like this is one of the biggest reasons people make the third mistake. Right? Mistake number 3, you hold on to losers for too long. You might have been in the same shoes as someone who bought stocks, and right after they bought it, it started to drop. You ended up holding on to that losing trade thinking it'll come back. Or I couldn't have been wrong on this one, or worse yet, I'll buy more, I'll double down. Have you heard people saying that? Very dangerous. So looking back at Telstra, right? If one had bought Telstra, one would have needed a stop loss, and you wouldn't have been in a situation where you could have lost 30 or 40 odd %. Right? So this all comes down to an exit plan. So one of the worst things you can do is not have an exit plan. It's like jumping out of a plane without a parachute. So if I go back to the Telstra example here again, all right, if you bought it and then you watched it fall in price, let's say you bought it here, now you watch it fall all the way in price, you're hoping that it'll come back. Let's say you bought it around about here, you're seeing it come back here. It's a long way until it gets back to where you bought it. This can be really emotionally draining. You're reminded each and every day of your bad decision. Don't get yourself in that situation. So you also have an opportunity cost of not being able to put that money to work in another trade going up. We don't want that to happen to you. So you're not going to buy stocks that are going down anymore. And when you get into trade, you're going to have an exit plan each and every day at your fingertips for the stocks that you consider. Here's another graph here. I spoke to a lady at a conference recently who owned a stock that looked like this. Some of you may recognize it, right? So she bought it right at the peak and it dropped right afterwards, right? So she bought around about here. It had gone up. It sort of peaked. Prior to that peak, it had sort of peaked up around about here. She bought around about here. Now it had dropped all the way down here. She didn't have an exit plan and she was still holding on to it. We asked her why she didn't sell. She noted that she didn't want to sell because her husband thinks it's going to come back in price. So now, by not having an exit plan, not only has it caused big monetary loss, it's also caused unnecessary stress in that relationship. So the fourth big mistake causing people to lose money in the market, and that is that they ignore market direction. This is a huge mistake that a lot of investors make. Right? For years, the gurus taught us that buy and hold was the way to go. And unfortunately, this has caused a roller coaster ride for many of you in your portfolios. This is just like the roller coaster picture here, right? You've got your ups and your downs and your sideways movements. The way up is slow, just like your portfolio on the way up, it's slow, right? And then when it drops, just like a roller coaster, it drops really quickly, right? Now, I'm guessing there's a few of you in attendance today who have held managed funds, maybe currently holding managed funds, and you've held them during the global financial crisis, the flash crash, or even the tech bubble pop. If we just look at 2008, the market dropped basically 50-odd%. And when you lose 50-odd%, you need to get a staggering 100% just to get back to break even. For many people, that could take many, many years to recover from. Maybe never, right? Here's one of our customers here, Lynn. Lynn shared his experience with us during the dot-com bust. He spoke about his experience during the dot-com bust years back. He didn't have VectorVest prior to that. So during this time here, Lynn was investing into the market during the dot-com boom. And he noted during dot-com boom, I took 80,000 and increased it 5 to 6 times in 2000. I proceeded to lose almost everything over the next 2 years. I was pissed and needed someone to blame. People do not make rational decisions when panicked. Now, as I noted, this webinar is about you. So here's a question. Let me ask this. Which of these mistakes has cost you the most? The first one there, you think of the money first. You buy stocks that are going down, right? You do dollar cost averaging, hoping that those stocks that are dropping in price will turn around. You hold on to losers for too long, or you ignore market direction, or maybe you do several of these mistakes all at once. The big problem is that the model that you've been using to invest is broken. You had a broken system that you were using. Chances are you're using a broken system. So to fix it, we need to install the correct system. I want to share with you the system that we use with our clients. It's a system that we teach and support with live coaching. In these webinars, I'd like to draw it out as a triangle because it leads down to two main things. Let me show you. Right, so if I was to draw it here, let's draw the first triangle here. All right, so firstly, what we want to do here in the first one there, all right, so I've drawn a triangle and I've put in 1, 2, 3, 4, 5. All right, so you might just want to jot this down yourself as well. All right, but the first thing you want to do here is you want to make a note there, stock analysis. So you want to analyze any stock that you're after or interested in and know whether it's over or undervalued, whether its earnings are rising or falling, and how safe it is. Take an inventory of all the stocks that you own or want to own and really understand them. So first thing first, that's what we do. We want to know more about the stocks that we own. Secondly, we want to know our exits. So you don't want to just simply hold on to losers for too long. So you need to make sure that every stock that you own has a stop in place to minimize your risk. In other words, you want to know your exits. You don't not want to have an exit plan, right? It's like the old image of jumping out of the aircraft without a parachute. Thirdly, you don't want to ignore market direction. So you want to have a definite signal or rule in place to make sure that you know when the market is rising, so you know when it's okay to be buying. You also want to know when you need to be careful. Second last one here is you want to find good stocks. So point number 4 here, you want to find good stocks. You don't want to buy stocks that are going down in price. So you want to find good quality stocks that are rising in price for your portfolio. right? So you want a technique that finds stocks that are likely to go up, not down. And then the last part here is plan. So you don't want to just trade emotionally. You want to have a written plan that you follow and you know that works. Not just a plan that you simply have on paper, but a plan that you actually follow. It's written down and you follow it. So the plan is not just a make-up plan in your head as things progress. This is a fixed plan that you follow. So by using this 5-step process, it leads you to trade with confidence and generate consistent gains. So the first thing that you want to do is focus on the areas where you are lacking. Okay, so before I jump to this question here, let me just note this. Let's do this first and foremost. Let's take a pen. So you might just want to do this on a bit of paper. So what I'm going to do here is I'm going to change my pointer option and I'll put back on a pen here. So what I want to do here is I want to go and tick off the areas that I'm good at, that I feel that I've got under control. And I want to go and put a little cross next to the areas where I need a bit more work. So let's say I feel confident with my stock analysis. So I say, yep, big tick there. I'm happy with that. Oh, no, I don't really have stop losses in all the stocks that I look at. And do I have a buying signal to go into the market? Not really. I kind of just buy when I think it's a good time to go to the market. But, you know, I am good at finding those stocks. So, you know, do you have that plan in place? Do you have that plan in place? So you might say no. So for example, your report card might look like this. I'm good at finding stocks. I'm good at stock analysis, but I'm not timing the entries into the market. I don't know what the buying signals are, and I'm certainly not putting stop losses in place, and I'm certainly not following a plan. All right, so the question I've got here there is as follows. What did you just learn about your investing strategy? What areas do you need to focus on first? So you might go back here and look at what areas do you need to focus on first? You'll know where your weaknesses are. You'll know where your strengths are. The idea being that we want you to concentrate on where your weaknesses are so you can improve your investing. So let's dig a little bit deeper now and look more closely at how to pick stocks to buy. In fact, I'm going to show you how some of the top investors out there in the world pick their stocks. So what's holding everyone back from being a top investor? Well, most of the problem is not your fault. First, you just get buried with data, right? A lot of places tout about how much data they have, right? So it can look like something like this. You just get buried with too much data. This is something that one of our competitors provides, right? It's their sample report. Look at all the information that they have there for you. You have to look through all this each and every day. No wonder investors are confused when it comes to deciding which stocks are good. You're also not given the right tools. You're not given an easy way to find the best stocks, and you're left struggling. It's like giving a mechanic the wrong type of tool for the job. Additionally, you're taught by the gurus that you need to spend a lot of time on each stock. In fact, Kramer here says, if any of you have seen Mad Money here, Kramer here notes you need to commit about an hour per week per stock. If you don't do that, you're gambling. So if you have like 10 stocks in your portfolio, well, you do the math. You're going to be there for many, many hours, right? So when you do this wrong, you end up suffering from analysis paralysis. You spend hours upon hours poring over all the data that the market throws at you, and I'm sure a lot of you are guilty of that. Plus, when you spend a lot of time staring at something, you end up convincing yourself that you see something that just isn't there. And when you do this right, you'll know what to look for, and this is what we want to do for you. We want to show you exactly what to look for. You'll be able to look at a graph and quickly know whether you should be in that stock or not. Right? If you don't believe me, have your pen ready. In just a moment, we're going to walk away from this section with at least 5 stocks that you're going to like the look of. So let me show you how to do this. Right? To do so, let's get into it and do this as follows. Firstly, Dr. Bart DeLito, the founder of VectorVest, taught us that good portfolio management starts with buying the right stocks, just like with a sports team. Right? So if you fill the team with great players, just having those great players would help the team do well. So by filling your portfolio with really good stocks, just those good stocks alone would help your portfolio do well. So let me share with you the checklist that we teach our clients when looking for stocks to buy. Firstly, we look for stocks whose price is steadily rising and not volatile. Secondly, we make sure that the company is making money and growing their earnings. Thirdly, you should favor undervalued stocks. So let me give you a little quick quiz here. All right, so I'll show you 3 graphs here. Don't worry what these stocks relate to. I just want you to concentrate on the price patterns of these 3 stocks. So the first one here, look at the pattern taking place here. And let's do this again. I'll change my pointer here and let's put on a pen. So this is the old dollar cost averaging example. Buy here, you never got it cheaper. Buy here, buy here. Wow, once in a lifetime opportunity now. Wow, you can never buy better. Wow, look how cheap it is there. What ends up happening? Do you like the look of that pattern? Certainly not, right? What if I showed you pattern number 2 and said to you, where do you think the price is going to go? Well, if I follow the pattern, it's kind of done something like this. Where is it going to go? Is it going to go either up or down or sideways? Your guess is as good as mine, right? Very difficult when a stock is all over the place. Which then gets us to stock number 3. And this is what we favor. Stocks that are doing what you want them to do, going up in price. The other thing we want to do, so we not only just want to buy the stocks that are going up in the direction we want them to go, but we also want to buy into stocks where the earnings are increasing. So VectorVest calculates the forecasted earnings per share, which makes it very easy for me. I don't have to go to places like Yahoo Finance and dig through a ton of earnings data each day. So in this example here, you can see the earnings. Look at those earnings. Beautiful left to right set of earnings taking place. And it's no surprise that a rising set of earnings is the engine room of price appreciation potential. So would you not invest into a company that is making money year in and year out? So you want to find that smooth left to right price pattern taking place with a rising set of earnings. The next one here that I want to show you here is we want to favor companies that are undervalued. Over time, we found that stocks, price and value go to meet, and typically price goes to meet value, not the other way around. So if we can find those undervalued companies that are growing their earnings consistently year in and year out with a smooth left to right price pattern, we are putting a lot of odds in our favor. Just to show you an example here, so in the VectorVest system, I went back to the 2nd of January, the first trading day of 2019, and I ran a search, and I made sure that I was finding stocks that were overvalued. Now, you might be saying to me, why would you want to do that? I'm finding the overvalued stocks to demonstrate a point. So I ran it from 2 January right through until the 21st of February, for example, here. And you can see our return wasn't too bad, 6.56%, because the market on average was moving up. You can see that the market on average had gone up 8%, and these stocks here had gone up 6.5%. It's not too bad, but you can do so much better. Let's flip it on its head. This time round, same parameter sets, but this time round, we're finding undervalued stocks. These were the stocks identified from 2 January. I ran them through to the same time period again. Look at the difference. This time round, we doubled our returns. Look at the winners here. We only had 1 losing trade as opposed to 2 when we found the overvalued stocks. Okay, so this checklist alone will make you a better investor over time. Now, do you remember when we spoke about Telstra earlier, per the question that I noted there on Telstra? The question there that was put to me, was Telstra a good buy at just below $5? Well, if you apply that checklist that we've just noted, right? So we went through the 3-part checklist. So we did this in the webcast. This is how we all came to the conclusion that Telstra was not a good buy at just below $5 back there in June of 2016. And why was that? Well, you can see what was taking place here. Firstly, certainly wasn't a smooth left to right rising price pattern, and it had become quite volatile and falling. It was overvalued. You can see the value line versus the price, and you can see that the earnings were starting to fall. Notice what happened as the earnings continued to fall further and the value of that company became more and more overvalued. You started to see what was taking place. Look what is currently taking place now. You're seeing the earnings have dropped right off. There might be signs of a little bit of a turnaround. Time will tell. So this might explain why the price might start turning around here, but we have to wait to confirm if those earnings are about to turn around. It's certainly not convincing at this point in time now. So let's go now and have a look at an example right now, which is stacking up. Beach Energy. If I showed you the Beach Energy graph right now, although there was a bit of a pullback from September to January, notice the earnings in Beach Energy have been holding up steadily for quite some time. Now, you might have identified Beach Energy back, let's say, at the end of November 2017 or early 2018. You saw the earnings that were negative, and now they were turning around. This is a good sign. So just in this example here, you might have identified this turning point here. You would have bought Beach Energy at around about $1. It's now just on $2 odd. You've doubled your money, right? So the power of VectorVest in play here, it was identifying the turnaround in earnings for you. What about this one here, BHP? So late 2017, say early 2018, for example, you identified here, for example, you can see the price was $27.69. VectorVest had a value of $31.48. Look at that, you saw the earnings that were negative. Now they're turned around and we're really starting to race away. You might have got in around about that $27, $28 mark. It's well over $35. A nice 25% returns. Let's jump into one in more recent times here, ServiceStream. So back on 8 January of 2019, there we are. Look at those earnings, step casing up very, very nicely. Here we're seeing the price of $1.74. Look at the value, $2.53. So nicely undervalued with a very nice earnings profile taking place. So this is forecasted future earnings, as well as the fact that the price is nice and smooth from left to right. So this stock here is meeting our 3-part checklist. So you might have got in, let's say at the start of January, and got in there at a price of $1.74 odd, and now it is over $2. Not bad, over 15% returns for just a couple of days there. So a few of you might be asking, well, how do I go about and find these stocks in VectorVest? I'm going to show you just how quick and easy it is to do. So I'm going to fire up VectorVest here, and what I'm going to do is I'm going to go over to a tool called the Viewers tab. So here we go. I've brought it across here, and I'm in VectorVest. I've clicked on Stock Viewer, and what VectorVest will do each and every day for you is it'll return all the shares that you can have a look at. So for example, if I were to go back there to 21 Feb, here are a couple of stocks. I'll just grab a handful here. I've selected them, and I'll graph the selected stocks. And all I want you to do is simply concentrate on the earnings profile. CUV, not bad. It had a very good set of earnings there taking place, and you can see the price came up nicely. It had a bit of a downgrade in the earnings, but they're slowly peeling back up again. So during this time period here, we can see the earnings taking place, continuing to rise, and we can see the share price going up there from about $16 to $17 odd to $24 plus. All right, let's jump on to the next one here. Look at this one here, Gin. Beautiful set of earnings here. It's been steadily rising for quite some time. The price there at $2 odd, all the way above $10 now. Look at those set of earnings as they continue to power on. Another one here, AQG. See quite a nice turnaround in the earnings here. So although the share was struggling a bit, the earnings eventually played out, and look at that, bang, up goes the share price. Right, so we've seen that correlation time and time again. The higher those earnings rise, the higher the share price tends to rise on average, and it might be held back for a while, but eventually the fundamentals kick in. So the next one here. So here's Beach Energy. So this was the one that we looked at before, and you can see, look at those earnings powering on, and here's the share price. It was about 80 odd cents, and it's powered on to just over $2. Here's one here. You haven't got a lot of data to work with, so this one here you might give a miss to say, well, I need a bit more data. This one here, Altium, very nice set of earnings, and look at the share price. Eventually that share price reflects the earnings taking place. So at VectorVest, each and every day, you've got plenty of stocks to come in here and to have a look. Look at A2 Milk, great set of earnings in recent times, and look at the share price. How quick and easy it is to identify these types of stocks. So let me ask you this question. How is this different from what you've been currently doing to pick stocks? All I did was simply grab the top couple of stocks there in VectorVest, both fundamental and technical analysis, as of, let's say in this example here, back in February, I graphed them and I was easily and readily able to identify the earnings of those companies in just a couple of seconds. And hopefully you're seeing just how quick and easy it is to do. It speeds up your investment process. You're not spending hours upon hours poring over all sorts of fundamental and technical analysis behind your computer. Using VectorVest, you can identify that in just a couple of seconds. So I want you to decide right now, if you had a choice, would you rather find stocks by sifting through a ton of data, or would you rather get your answers quickly? Do you want to do it the hard way or the easy way? Of course, we just want the quick and easy way to make our decisions each and every day. So let's put this all together and show you how you can achieve this in a 10-minute management plan. Before I do so, I want to bring up a case study here. So I'm going to introduce Dennis to you. For many years, Dennis invested using the conventional wisdom of buy and hold and dollar cost averaging, among other techniques. He was greeted with losses and some successes. Then he said, the unthinkable happened to him. Tech bubble burst in the United States in 2000 and he experienced what he described as gut-wrenching losses. He was almost decimated and had to rethink any plans of early retirement. In 2002, he was introduced to VectorVest and he learned about market trends and how to select the right stocks. Everything fell into place when he took the information along with risk money management. He said his portfolio was on a consistent path of recovery. He regained his confidence to do it himself, and now he can enter retirement with a healed portfolio, never to be broken again, with the confidence and comfort levels of continued success. Dennis has turned things around. Let me show you how he did this. So he followed a simple plan. So let's draw together. Firstly, what I'm going to do here is I'm going to put up a grid, right? So you might want to put in a grid there. If you're drawing this up, I've put in 9 boxes, right? So first thing you need to do is you needed to know when it was okay to buy. So when to buy. So firstly, I'm going to note over there when to buy. The second thing you need to know is what he should buy. So what to buy. And the third thing he needed to make sure, and that was when to sell. Now, a few of you noted earlier, when to sell is one of the most difficult parts of your investing. So use the market signal to tell him it was okay to buy stocks. So you needed a market entry. Now, some people might use, say, moving averages on the all odds, for example. In our system, we have a thing called green lights, which tells us when it's okay to buy. You also want to make sure that he was buying in a rising market. How many investors out there go and buy at the wrong time? They go and buy in a falling market. It doesn't matter if you buy some really good quality stocks. Chances are in a falling market, even the good quality stocks are going to fall in price. All right. You need to make sure that the stock was rising. So you went through that checklist. Is it smooth rising from left to right? Okay. So you need to make sure that he was buying those smooth left to right rising stocks. So what to buy? The rising price in the rising market. You need to make sure that the earnings, right, those earnings were rising, and you also wanted to make sure that the stocks that he bought were undervalued. Right? When to sell, he needed to know when to exit out of the market. We're not just going to simply buy, hold, and hope. If we can see that the market is turning to the downside, we want to protect our positions. So we do that by applying a stop loss, and we also make sure that we want to apply a profit target. So again, what I want you to do is I want you to take this and work out where your strengths and weaknesses are. So again, you might tick the areas that you're good at and put a little cross next to the areas that need a bit more work. Where are the areas that you're doing okay? So what you could do is maybe give yourself 2 ticks for an area that you're very good at, 1 tick for an area that, yeah, you're not too bad, and give a cross next to an area where you're struggling. So maybe your issue is not knowing when to sell. Maybe your issue is not finding those undervalued stocks. Perhaps you've been buying too many overvalued stocks. Or perhaps you have no idea what the earnings are on your stocks, and chances are that if you ran your stocks through VectorVest, you'd find out, oh, hang on, wow, that's interesting. A lot of the stocks I was buying had falling earnings, which explained a lot of my falling share prices. Or you might be pleasantly surprised and say, oh, that explains why that stock that I bought, like A2 Milk, for example, that explains why I made so much money on it. I bought into stock that had a great set of rising earnings. I didn't really understand, but hey, it just happened by chance that it did have a great set of rising earnings. But I wish I'd known that it did have a great set of rising earnings, because I would have felt more confident, and maybe I wouldn't have sold out quite so soon as what I did. So I hope that table helps you further to identify your strengths and weaknesses. So the question I'm going to put there to you then is, what area do you need to work on first? Okay, so I can't tell you exactly why you turned up here today, but let me take a good guess at it. Perhaps you turned up because you're just not happy with the results that you're currently getting. You're not satisfied with the results. Maybe you just feel like you've been buried with far too much data out there in the marketplace, and you just want a nice, simple way to get your information in a timely manner so you do not have to spend your life looking at reports and behind a computer screen. Perhaps you've been inconsistent, so your results might have been up and down and you're tired of the roller coaster ride. Perhaps you lack confidence. It might be a combination of everything. So you just don't have the confidence in yourself that you can buy stocks that will go up. Maybe you're doing okay right now and you just want to get better. But even if you're doing okay right now, think about how much money you could or should be making. At this event here today, I hope that you've seen it is possible to get the answers quickly using the right tools and using that checklist. That by doing some of the things that we've shown you today, that you can confidently take control yourself and not have to rely on the quote unquote gurus who tell you to buy stocks that are going down, and using the notion of dollar cost averaging. And you too can get consistent gains in less than 10 minutes a day when you have the right plan. Now, right at the start, I promised I'd give you everything I could, and at the end, I'd show you a system where you could take all the things that we just covered and plug them into your own investing to get the results faster. So that brings us to the question here, the obvious question, that is, what should I do? How should I go about this, right? So the obvious question is, how do I create this type of system in my portfolio right now? What should I do to do this? How do I create this? So you've got a choice, right? And I reckon the choice is as follows. You can do it alone and choose to continue doing it alone and put together some of the things that you have taken away from the event here today and learn by trial and error. But mistakes can be very costly. Or you can choose to do what I did and what Dennis did and what countless others or thousands of others around the world, and that is, why not apply a system that does a lot of the work for you? There's a system that has already done most of the work for you, a system that is used by tens of thousands of people across the world to help them make money in the stock market each and every day. So I want to give you a plan that if we provided you with this training over the next 30 days, this is what we're going to look to do for you. It's a simple plan called the Successful Investing Quick Start Course. It's exceptionally powerful, the Successful Investing Quick Start Course. And it works as follows. Right, now, before I get to that, I need to point something out. Albert Einstein noted that everything should be made as simple as possible, but not simpler. It is important that you understand that this is not a get-rich-quick scheme. It is not something where you should expect results in the next 24 hours. This is serious and requires some effort on your part. If you're not going to commit to it, then don't do it. It's not for you, right? You should log off right now. This is for serious people who take their investing seriously and who are willing to put in the time to learn the system. By outperforming the market in as little as 10 minutes a night, you're going to have more money to provide for you and your family, more security, more freedom to do the things that you want. Otherwise, why would we invest? We want to help you put this in place so you too can be successful in the market. So that's why we've put together this quick start course for you. We put it together for serious people who want a simple way to buy the right stocks at the right time and know when to sell them. So you'll begin to see steady, consistent gains and remove that frustration and anxiety from your portfolio. So the easiest way to explain the course is to map it out for you. So you've got 30-day trial to the system, to VectorVest. We're going to give you access to the VectorVest system, but more importantly, we're going to give you access to the valuable information on how to become a better investor. The first module in the system there, you might give yourself 6 days to go through it. It's only about a 20-minute odd video, but you want to practice the techniques in there. So firstly, the first module there that we're going to give you access to there. It's going to teach you about becoming an expert at analyzing any stock. You'll be able to quickly determine whether a stock is good or bad, and this is where you're going to be able to get rid of the information overload. You're going to see exactly what indicators to look at, and you'll get your information nice and quickly. Secondly, so the second module there, it's about 15 to 20 minutes as well. We're going to teach you one of the hardest parts of investing here, and that is knowing when to sell. So the reason this is important, because as a lot of you have noted, knowing when to sell can be one of the most stressful parts of investing. So we're going to teach you how you can minimize losses in your investing, and we'll also walk through some exact steps to take as to know when to sell out your given stocks. So the outcome here is that you'll be able to have peace of mind, because you'll be able to go into any trade knowing exactly when you will sell. Now, if you think about it, if the worst thing that could happen to you on a particular investment is that you do not lose more than 1% of your total investable capital, guess what? If the trade goes against you, you're not stressed out of your mind. You go, oh, well, I lost 1%. You live to fight another day. Where it goes pear-shaped for a lot of people is they risk far too much money. And all of a sudden that trade doesn't work out, or that investment doesn't work out. And all of a sudden they're looking at 30 or 40% losses on their life savings. That can create a lot of issues, and we're going to teach you exactly how to avoid that. Okay, so that's lessons number 1 and 2. Then in lesson number 3, we're going to show you the exact signals to look for to enter the market. And this is important, because if you buy stocks at the wrong time, even good stocks will drop when the market drops. So you've got to know when it's okay to buy and when you should not be buying stocks. And the outcome here is that you'll be putting the probability of success in your favor. All right, so what we've done now is we've got the bad apples out of our portfolio, and we've identified when it's a good time to buy the new positions. And then in lesson number 4, it's about teaching you what stocks to buy. Without this, you have to rely on the guru sending you stock picks, or you have to waste time sifting through that blizzard of information out there in the marketplace. So we're going to get you 2 top cherry picking techniques to pick the best stocks for your portfolio. Right, so you'll never be left with a guessing game as to whether a stock is good or bad. You'll never have to trust someone else again. You've got the system. We're going to show you exactly what to look for. So now we're at the point we've gotten the bad out of our portfolio. We've put the good in. And then what we're going to do there in the final lesson there is we're going to show you how you can do this all in 10 minutes a day. So we don't want you to be spending hours managing your stocks. We're going to show you how to simplify your day and have a plan. And by the end, you'll be able to consistently turn up profits month after month. Now, by learning all of this in the course, you can have a simple step-by-step system to buy and sell stocks. You'll be able to manage your portfolio in less than 10 minutes a day, and you're going to have a system to consistently outperform the market. Now, just this course alone, what value would one put on a course like this? We can confidently say that this course would be worth at least $150. But we're not going to charge you anything near to that. So here's what we'd like to do. So first thing first here, I'd like to help you over the next 30 days using VectorVest to turn your portfolio around. So even if you've had no success in the market or limited experience, we're going to do this together. So here we are. We're going to provide you with the 5 lessons here, right? So the way I'd break it out, you've got 30 days to trial out the VectorVest system and also get access to these lessons, the all-important lessons. I would allocate as follows. I'd give about 6 days on average to each lesson. Now, bearing in mind each lesson, to watch each lesson, it's not going to take you more than 20 minutes, 20 to 25 minutes per lesson, but I also want you to concentrate on the techniques taught in those lessons and use VectorVest to practice those all-important techniques. Use the techniques. Identify when VectorVest said was a good time to go into the market. Use those techniques to find the stocks that VectorVest advocates per that checklist, etc., and then test them. How would this have stacked up? Chances are you're going to see some very good results on your paper testing, so to speak, over the next 30 days. So we've built these 5 lessons as recorded classes, which you can access anytime, repeatedly. You guys have spent about an hour with me today, and here's what I'd like to do. If you want to join me and have me fix your portfolio and plug in a system that consistently works, then let's work together for $9.95. I want to make sure that I help you fix your portfolio and turn it around at little to no cost to you. I can barely even buy lunch for that these days. So we've built the courses directly into VectorVest. So you will have access to these courses for the next 30 days. We're also going to give you access to VectorVest for 30 days. That gives you time to go through the courses, implement the things that you are learning to see the results. And this tool will drastically reduce the amount of time and effort that you spend finding stocks and determining market direction. I'd be lost without it. So 1 month of VectorVest is valued at $59 a month. After 30 days, if you choose to stay with us, it's $59 a month. Or if you don't want it, just send us an email before the 30 days is up. All right, so that's our first bonus to you. The second bonus here is that I don't just simply want to give you content, I want to help you apply that content. So once you get access to the VectorVest system for your $10, you're also going to get access to all 5 modules, plus you'll be invited to the Q&A sessions on offer during your 30-day trial. Here's a testimonial, all right, by Tom. So he noted here in February, after just a month and a half of going through the course and attending the coaching sessions, Tom wrote the following. I'm up 9% this year after a rocky start in the first week, and I think I have finally taken the emotion out of investing, which cost me dearly last year, as I ended up the year only 0.47%, having sold in panic 3 times in the first month and a half, only to see the stocks rebound practically the next day. I even have a written plan after all these years. So that's what it's all about. Make sure that you've got a plan. Ray goes on to note, huge time saver. Your system brings. Here are some of the other key testimonials we markets had which I haven't seen in any other. Here's one. Products. Since following the steps in the course, my portfolio is up 22%. And these are my retirement portfolios, 4 in total. And the improvements, as I am sure you can understand, is very important. Million notes, everything is super info. Gave me insights about investing, buying stocks, knowing when to buy, what to buy, and when to exit. Fantastic lessons in one place. So that's what it's all about, the all-important when to exit. It's just as important as to knowing when to buy. Volta notes, I'm committed to a single trade so far using the techniques demonstrated. So I've committed to a single trade. I'm up 5% so far. The best part is that I'm not losing sleep. Melody notes, in the last 3 weeks after pruning my portfolio and adding only a few new stocks, I'm up about 9%. Before doing this, I had an overall portfolio loss. Right, more confidence in my investing decisions. All right, Terry notes, I feel more confident on what stocks to pick, when to pick them, makes me want to learn more. So right at the start there, I asked you which mistake is costing you the most. Here is the thing. If that mistake is more than $9.95, then let's fix things once and for all. Let's make it such that 2019 is the year where you really start to turn things around. All right, so here's the course. The 5 lessons provided in the course, about 20 minutes each, and there's the link. www.vectorvest.com.au/10min. So this course is self-paced and you can review it as many times as you wish. Plus, we're also going to provide you with live Q&A coaching sessions, right, where you can ask as many questions as you require in regards to VectorVest. This will help keep you on the right track such that you too can start making money in the market. So another note I want to note here, and that is that this course is completely guaranteed. Now, you probably won't need this, but if for some reason you take our Quick Start course and you actually do what I teach you, and here's the thing, please listen, not if you buy it, but if you actually do it, it will work for you. And if for some crazy reason it doesn't work for you, if you're like the 1% that it doesn't work for, just send us an email back during your first 30 days and we'll give you all your money back. This gives you that peace of mind. We are very confident that you'll love what you get. You're not locked into any contracts with us. So there's that link again, www.vectorvest.com.au/10min. Now right at the start, remember I noted if you stuck to the end of this presentation, I was going to provide you with a trading plan where you can go and start implementing some of the great things that we've discussed today. So there's that link, www.vectorvest.com/plan. For those of you wanting to come along to the 10-minute investor, right, get access to the course, get access to VectorVest for 30 days and come along to the live Q&A sessions, there's the link again, www.vectorvest.com.au/10min. If you've got a whole lot of questions you'd like to ask the team, here's our toll-free number in Australia, 1-800-303-782. I'm going to show you what the web page here looks like for vectorvest.com.au/10min. All right, so there it is. That's how the link there goes to this landing page. That's what it looks like. So you get access to the 5 courses. You get 30 days access to VectorVest. Plus you get invited to the live Q&A sessions. You fill in the details here. Check the box here after putting in your credit card for the $9.95 USD. It notes here, I understand that I'll be charged $9.95 USD for the Successful Investing Quick Start course. And then you click Submit. Once you've submitted, we'll give you access to those 5 courses immediately while we set up access to VectorVest for 30 days for you. I'd like to thank you again for coming along and listening to this presentation. They're the important links again. Really look forward to seeing those of you come along to the Q&A sessions who've gone through the 10-minute investor course. I can't wait for you to get that knowledge. I can't wait for you to get up to speed to come along to the Q&A sessions. It won't take you long. It's about 15 to 20 minutes each for each course. Go through it, play around with VectorVest a bit, get your experience up a bit. It doesn't take long at all to master the system. Right? It's a great system to use. Then come along to the Q&A sessions and I'm going to show you some great techniques to improve your investing further. Thanks again. Look forward to seeing you at the live Q&A sessions.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.